Greetings, everybody. This is Jeff Scott. This is my top-down review for the weekend of July 25th, 21st. Actually doing this before dinner on Saturday. Thought maybe I tried doing this when I haven't had 2 glasses of wine and was falling asleep. What a week. I mean, wowzer. Who would have thought waking up to my text message from Kathy, my neighbor, ex-neighbor, because we moved, about it was going to be a horrible day in the market, and it was for a couple hours. Then we bottomed, at least short term. Growth broke out, and now the question is, will earnings season just feed the beast? So again, my name is Jeffrey Scott. My email address is hgsidoc@gmail.com. If you can do me a favor, if you have comments, put them in the remarks or send me an email. If you have questions, same thing. If you like this, hit the thumbs up. If you don't, hit the thumbs down. If you want to get notification, if you don't participate in any of the boards where I send an email to, hit the subscribe button. That will give you notification when I post these. I do this for fun and entertainment, and I'm not paid, and I don't keep any list of subscribers. But I do enjoy your comments. This is for educational purposes only. Anything I say is in the spirit of education and not to be considered investment advice. I'm a doctor, not a broker. I use a lot of tools. No one pays me to use their tools. I've paid for all the tools that I use, and I use the things that I like. And trading involves risk. You and your owner are solely responsible for any investment decisions you make. I'm going to probably mention some things about options and maybe even comment about how I thought all night that I did experience the big disaster of option trading. It can't ever happen to me, and it's about position size, and I'll never make that mistake. But the market almost made it for me, and I'll go further about that later. I'm not going to go into too much detail here. Some of these are the influences that I have. I call my trading be your own guru. I would never call out if somebody I knew was sick or in the hospital, but Ron Brown actually mentioned what's going on and where he is when he sent out his newsletter today. So Ron Brown, good luck and healthy and safe travel, what you're doing. I think it's great, and hopefully it'll make you well enough that you can actually come and meet up with me somewhere in the country and do a live Brown and Scott type of a webinar, or not webinar, but live training. Wouldn't that be fun? I've learned from a lot of different people, and I've tried to put together my own style of investing. It must work because every week I get more people watching this. Don't be fooled. Most of them are not through YouTube. They're through other sites, so the numbers probably don't reflect. That's probably because it's free, let's face it. But I think it's your own responsibility to become your own guru. I use a lot of different tools, and I'm just calling out the main things you're going to see tonight. TradeStation, Thinkorswim, HGSI, EdgeRater. Within TradeStation, rather, I got John Person's stuff, Dr. K's stuff, Sager's Q tools. And you'll see there's a new thing here, Wealth Charts by Rob Hoffman. I've been playing with this, and I may actually talk with them about porting some of the things that I do there. It's a really nice platform, especially since you could trade right off of it, something that would be awesome to do. You can't do an HGSI. I got some ideas, but right now it's just hypothesis. I'm never paid by any vendor when you buy something that I suggest or use. And I'm an unpaid volunteer, and this is what it is, free education. I always do like to talk about highgrowthstock.com, the website, and the software tool. I'll be using it a lot today. I have no financial relationship there, except it's a great guy, great team, and I love the tool. You can get a free trial with a free 30-day trial. And under investing strategies, there's hundreds of movies by Ron Brown and I and others that can help you use it. And even people who you may recognize much more than me, like Gil Morales, one of the O'Neill disciples, talks about it and actually uses it often on his weekly or multi day a week paid webinars. Stock patterns are cyclical. I say the same thing every week. You know, bisect the top and you kind of have what we've had this year, which is up and down, up and down. And whenever you think the market's going to roll over, something picks up and the market goes higher. Whenever you think you're going to break out to new highs broadly, the market sells off. So last week I said, it feels like we're going lower and the market will probably end up higher. That's exactly what it did. This week it feels like we're going higher, and we'll talk about what is likely to happen. Because I think we're going higher, I've reduced my hedging, although I'm not hedge free. I want to get through this weekend, and I've got hedges around some of my big cap tech, but they're not tight hedges because I really think they're going higher. I will turn on and off hedges as I get more concerned about the risk in the market, but I'm pretty long right now. If we look at how the market ended on Friday, this is what I call my sector review. I've probably got more of the REITs that are actually in the IYRT or whatever it's called. XLRE is another. But each of these, starting with materials, has the main stocks in the sector ETF. And one thing you can see is that energy was weaker than most. Other than that, it's a sea of green. So energy, the weakest, a lot of strength in the market on Friday, frankly, for the week. Let's take a look at what we saw this week. First thing you notice on the major indexes, you see a lot of green on the top. That just shows you how bullish. You'll also note new high set Friday on the S&P futures, the Nasdaq futures. The Dow had a closing high, but the Dow Futures we'll look at closer did not set a new high. And I like looking at both futures and the major indexes and their ETFs, and we'll do both. This is what you want if you're a bull. Not really tight, but a nice steady uptrend. This is the S&P futures. And notice how on Monday, we did get that sell-off. It hit the 50-day moving average and it bounced. And then Tuesday, Wednesday, Thursday, Friday kept going higher. We had a John Person buy signal come in on Thursday. So we're at all-time highs, all-time closing highs on the S&P futures. Again, it's hard to be a super bear when you're sitting at all-time highs, but we'll come back to that. The Nasdaq futures, similar story. Maybe not the same at this point of the move angle, but a pretty steady angle. And again, not the tightest with multiple pullbacks, unlike the S&P, actually undercutting the 50 frequently. And what happened on Monday? We opened up below the 17, closed in the upper half, and we're up the rest of the week, closing at an all-time high on the Nasdaq futures. If I look at the Dow futures, the Dow futures from a closing perspective are hit an all-time high close. But for an intraday, they still got to get up to 35,000. So they got a little bit of work still to do to hit an all-time high. Again, are you bullish or bearish when you see this? You got to be bullish, but here's a bearish argument. I never use this program for drawing, so I suck at it. Using a word of my son's generation, which is the horizontal line, price line. I never, ever do anything with this thing. So am I going to even bother? Oh, I'll just do this as a straight trend line. Oh, forget it. I'll do it later, but notice where that white line is. And notice how many times we hit that. We broke above resistance on Friday. We broke above resistance in the past. Can we stay above resistance? Time will tell. But the Dow futures look pretty darn good, don't they? The Russell futures, interesting. I actually made a lot of money trading the IWM. Why? Because there's a magic number here around 210. You got right below it here. And that was sort of my downside target. Now look again at this line. and look to the left, and you could see that we traded down to what's been the bottom of the box. I'll show you why I went long the Russell early in the morning on Monday and why I had a nice return on some IWM butterflies that I did. But like the rest of the market, reversed on Monday, up Tuesday and Wednesday. But unlike the rest of the market, probably because I was sitting on 100 contracts for calls, it sold off on Thursday and Friday a bit. Still a big up move off the bottom. Sideways move has been the story of the Russell this year. The VIX, here's Monday, and the rest of the week it came down. Hard to be much excited there. And this is probably why we saw weakness at the end of the week in the Russell. The dollar was firm this week. Now, firm being it went sideways, maybe up a tad. The dollar is still way down from where it's been. I still think dollar goes lower, but the dollar can be something that could be a deterrent to having a big move up. Now let's go out of this. PowerPoint back. Let me see if I close this. Now, if I look at the weekly markets, I'm not even going to go look at them individually, but you could see all-time highs on the E-minis, the Nasdaqs, sideways here at the Dow, but might be breaking out. The Russell also in a big sideways move, nothing on the VIX. And this is what I mean by the dollar's at the lower part of its pattern. Maybe it pegs the 200. I still think this is a bearish looking pattern and it goes lower. Now, we spent a lot of time with the expected moves, and what we have on these charts are daily bars, and the green and the red are the extent of the expected move. Remember, the expected move is set by the option sellers. It's a straddle at the money for 1 week. The more volatility, the wider. Their design is to, they're selling them so they make money, and for them to make money, the price has to stay within the green and the red. So there are actually statistics, and I showed you this a couple of weeks ago. And what I want to show you is here, both touch. You could see how unusual it is for any of these indexes, ETFs or the futures, on a given day or a given week to touch both the green and the red. You can only win high or low if you hold it to the end of the week. You can't win both to the upside and the downside if you're buying these things. But it's unusual, less than 10% of the time, the E-mini will touch both bars. I haven't looked at monthly, but it never happens. So why did I show you this? Let me show you why. Talk about crazy, I hate to use the ASS word, but crazy ass volatility. I'm not on TV, no one can get mad at me. You can always hang up. But notice this, Monday the S&P sold off hard and actually touched, went a little bit below the lower limit of the expected move. And then Tuesday, almost an equal and opposite, Wednesday, Thursday, Friday traded up and out the top. That happens 9% of the time, all right? 9% of the time. It's not that unusual to go outside the bands. It's bad for the option sellers, but hey, they're the big money. But to go outside both in a given day or given week is very unusual. The range is a little bit lower expected next week, but this kind of was the story of the market. I guess this was a bit of a bear trap. Got me out of some positions. I'll tell you what happened right now. I mentioned before. One of the rules of options is don't be short options at expiration. And that even if you're close, don't be short options at expiration. So I had a wide spread in Shopify. And when the market dumped, it really was going against me. So I decided to sell the long call, and the short call was sitting at 1,650. Now, I'm not talking about 5 or 10 contracts, all right? But it was about 50 points out of the money on Friday morning. So I was watching it during the day. And then I looked at it after the market closed, and it was at 1654. Now, I was convinced and certain that it closed out of the money. And the problem is it traded after hours, and it actually traded up quite a bit after hours. And so I went to sleep last night wondering whether or not I was going to end up with like 10,000 shares of Shopify short. Now, do the math. Shopify is $1,600 a share. Okay? And so I didn't sleep much last night. Not that I couldn't just sell it right away and take a 4 or 5 point per share loss, but the closing price at 4 o'clock was 1643. But TD Ameritrade showed 1654 overnight, and they showed my short calls at the money, or in the money rather. So this morning I woke up. I'll be honest, I didn't sleep much. I was worried about this one, and eventually I have a zero under my Shopify position, and what happened was they used the 4 o'clock price, not the after hours price. Now I knew that was the case, but let me tell you, when you got that sitting over your head, now, since that option was $7 out of the money at 4 o'clock on Friday expiration day, do you think it might have been a cheap option that I could have just covered? You would think, but it was still going for 87 cents, 50 bid. And 50 cents times a lot is, I didn't want to throw away 5 grand. Overnight, I was kicking myself in the heinies. It wouldn't have hurt that bad, but I would have had the margin call of all margin calls. So again, what are the lessons here? 1, size can kill you, all right? Number 2, even a low delta option that's way out of the money on a crazy day can hit you. Why did it almost get there? Because they got upgrades plus $200, $250 in price. So they had a big move. And the last thing is, don't be a pig. I was a pig. All right. I made good money on those options. I should have closed them out even at 50 to 85 cents and not had to worry about them being exercised against me. So options can be dangerous. It's also a source of why I have really outsized returns. So E-minis, you can see it went right through, very unusual. Nasdaq Futures, like the E-minis, traded down, never got to the bottom, and closed well above their expected move. Outsized moves, right? These things are designed for 2/3 of the time, and what is reality on the Nasdaq Futures close in 75% of the time. So happens, but that's a big move. If I look at the Dow Futures traded down and reversed. Now, if you're looking at this and you see it come right back in, don't you feel like you need to go long? I did. That's why I look at those. The Russell Futures, another telling story. Not only did the Russell, let's see, they touched both as well, and they do that, ready for this? In an average year, they touch 2.94% of the time. 3%. 3% on 52 weeks is 1.5 times a year. So this one we touched both, the low and the high. So this was why I got in, and what's the price right here? 213. This is sitting on 210. 211, I can't see that far. I've got a weird setup where I'm doing this on my projector. Yeah, 2100. And so where's 2110? All right, I got in somewhere around here. I did a 2010, 2019, 2021 butterfly. We'll talk about what happened. But what a reversal. Now, disappointed that it came back like this Thursday or Friday, but I was being a pig. But if you know about butterflies, if I trade above the middle butterfly, then my profits start to go down, capped by the top of the butterfly. So I was playing it, and it almost worked perfectly. My goal was for it to close the week at 20, the IWM. And I guess the numbers aren't going to match up perfectly because this is 10-1. My goal was for it to hit 219 and stop. The VIX, Monday morning, it traded outside its range, came back into the middle, and the dollar really did what you'd expect. It stayed within its range. So the expected moves, I think they're a very useful arsenal. So I look at a lot of different things. A couple of things that I find interesting. If you look at the March low, which would have been somewhere over here, February, this was last year, this is this year. So I'd have to look over here, and the March low is about where my arrow is. Notice this is not a price, this is a ratio of the S&P 500 to bonds, okay? And so you want this to be going up, and you want it above its moving average. And the ratio is not doing so good right now. So if you want to put a stick in the mud, if you're bearish, you want to see this stay below its moving average. Now, it's right at the moving average, and if this breaks above the moving average, then I'm going to be even more bullish about the market. So this is something that is perhaps a little bit of a wobble in the bull. You want spiders to be outperforming TLT, and right now the trend here is down, although messy. That means bonds are outperforming stocks, at least the spiders. The next one looks at the spider versus the equal weight ETF. Now, when I looked at coming out of bear markets, when I look at big moves, again, March of 2020, the S&P really outperformed the broader market, or the valuated S&P. So the big guys were the leaders. And notice what's been happening for months is the S&P is underperforming. So perhaps the reason why this market has been up and down and challenging and choppy has been because this has been inverted the wrong way. Well, look what happened on Friday. The S&P is now popped above, and you could certainly argue that we're resuming an uptrend, perhaps, in the S&P versus the equal weight. And lastly, I learned this from Chavacchio, listening to his webinar, looking at the S&P 100 versus the S&P 1000. So what happens coming out of the March low? Big guys really outperformed. What was happening over the last couple of weeks with small stocks doing better? We started pulling back in this ratio. Well, the last couple of days, we've popped up. So perhaps something good is coming here. Now, if you look at spiders versus TLT, and here we have the 2007 and the market rolling over in the S&P 500. And here's the ratio of what happened at that time, the spider versus TLT. The TLT outperformed the spiders, and it came down. As the market came up, the S&P outperformed the TLT until it wasn't anymore, and then the market went sideways. So again, right now, the S&P versus TLT is going sideways. Here we're looking at the 2020 correction, and you could see going down to the bottom and perhaps even turning over before the stock market. S&P versus TLT went from a sideways to rolling over, and then as the market recovered, the spiders outperformed the TLT. So we're in a place right now where we're going sideways here. It would be really nice to see the S&P start outperforming bonds. Now, I was so close to posting something. I'll come back to this in a second. Last week on my video, we were at about 20% of stocks, and this is the buckets. This is yesterday, today. So if this is Monday at 10:59 a.m., 47% of stocks in the S&P 500, or in this case S&P 1500, were below the Bollinger Band. It was 20% on my weekend review from Friday. I made a comment on my weekend review. I said, I would be looking for it to hit 40 to start thinking about getting back in the market. Now, the truth is, I'd be looking at it to hit 40 and get some signals in the chart. By 3 o'clock, it had gotten worse. 53.6% of stocks in the S&P 1500 were below their Bollinger Bands. Now, just think about that. The Bollinger Bands are designed to capture about 90% of the movement of a stock. 5% of the time it might be above, 5% of the time it might be below. If over 50% of the stocks in the S&P 1500 are trading below their lower band, what do you think is going to happen? Yeah, odds are they're going to come back in. So I'm watching, this is wealth charts, and this is the Wavy Tunnel Pro setup. Now, last week I pointed out that there was a sell signal here on the spiders, and there was a sell signal here on the Nasdaq. The Dow had their sell signal back here, excuse me, the Russell back here, and the Dow, I didn't see one of recent. So I'm sitting there Monday morning watching this chart on one of my screens, and lo and behold, the Russell, as it's reversing, gave us there's an arrow there, a buy signal. We also saw these red dots here, they're called semaphores, and I'm not going to give education on these because it's Jody, the Wavy Tunnel Pro FX trader. So it's her stuff, so Jody Salmon, so I'm not going to steal it or anything or steal her thunder, but I use it. And when I saw this signal and I saw these dots, I said, you know what? I'm going to load up on IWM calls, and I am going to start getting longer on the others looking for a reversal. Well, as you can see, we had the reversal, and now we're getting sell signals coming in on Thursday or Friday. Now, I think I really was a little bit aggressive because it is possible that this thing could have moved, and it may not have been the bottom, but short term it was the bottom. There's also, on this day, you could see there was more than average volume on all the indexes. So what did I buy? I bought it on Monday, and my net cost was about $2. So the way that this butterfly worked, this is days remaining. I bought 100 19s. Oh, I wrote over it. Okay. I bought 100 at 210. I sold 200 219s, and I bought 100 220. 221s. I can make up to $9 a contract between 210 and 219, or I can sell it for $9, and I'm risking $2 more, the 219 to 221. So if it trades above 221, I'm going to make $7. I bought it for $2. That's not a shabby return, especially in 4 days. If, on the other hand, it stopped at 219, I would make $9. I would get $9 back for the $2. So every dollar or every penny above 219 up to 21 is going to reduce the amount of money I make. This is not a balanced butterfly. A balanced butterfly would have been a 210, 219, 228, in which case I've got equal dollars between them. I don't like that because nothing makes me feel worse than I was right on the instrument, I was right directionally, and it moved so far, it moved back to where I lose money on the trade. Because if the loss is equal to the gain, if it goes too far, you lose. So I always do these unbalanced butterflies, which are a little bit more money, but it always, if I pay $2 with a maximum win of, if it goes too far, of $7 and $9, if it hits my target, I'm very happy with that. If I did an equal one, it could have lowered the cost of getting in. I think, let me look at it here because I've got my TD Ameritrade thing right here. IWM, and I actually did another contract too when it pulled back. IWM closed at $219.55, and then it sold off a little bit. So it cost me about 90 cents to get out of this butterfly. So I sold it for $8.10. I bought it for $2. That's a pretty good return. And I got a lot of contracts, 100 contracts, 100 shares a contract. You can do the math. And, this was middle of the way, and I ended up making more than that. But that's not a bad return in a couple of days, the number up here, on what I look at as a modest risk trade. So why did I take it? I took it because of the buckets, and I took it because I had signals. Buckets alone are not enough. Why is that the case? I remember this from years ago in 2008, 2009. Here's the end of 2008. And look at where the buckets were. 94% of the stocks were below the Bollinger Bands. And look how high, 65, 80%. How many stocks were below the Bollinger Bands? And the stock market kept getting lower. So you got to realize you got to have the signal, not just the buckets. Now, there's no question when I apply this over years, especially in an uptrend, when we peak, we've got a lot of stocks above the Bollinger Bands. And when we have Bible dips, we have a lot of stocks below the Bollinger Band. Hey, that's why I like the buckets. Let's keep going. Rates trickle lower this week. Here's 10-year and 30-year. Falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. Home builders are showing some life. I'm thinking about my tour through the market. MLPs were muddy because of the oil situation. I saw a bunch of utilities and some REITs. A couple of international banks for whatever reason. Looking at breadth. On the right, the large cap in white index, in reddish on white AD line and red index. You've got new highs on index and AD line, bullish. Small caps, not so much. You're below prior highs on both index and AD line. So big small stocks are lagging. You want to see what good looks like? Here's the Nasdaq 100. New highs, AD line and index. Beautiful. You look at the NYSE, not so good. We're well below the prior high. In fact, we got lower lows and lower highs. Are we rolling over? Is that a big problem in the market? Too soon to tell. Transports and IWM are underperforming. Diamonds, spiders, and Qs, no surprise, are outperforming. So is bonds, and again, TLT versus SPY, rates dropping, bonds are going up. Now, if I look at another measurement of breadth, might be stocks above the 200-day and stocks above the 40. This week, stocks above the 200-day actually reduced again. Takes longer to turn that ship, while stocks above the 40 improved. What really looked good was the 3-month new high, new low, had a nice rebound here, and not at an overbought point, and that's much more bullish than we were last week. Although last week we were looking to see if we get a reversal. Now, bothersome and interesting because it did exactly what I said it might do, or hoped it might do. Forget the said, that's kind of arrogant. Daily McClellan, highest highs, major divergences here on both the oscillator and the summation index. We talked last week that we were at a reversal zone. We actually went even lower and we reversed. Notice we didn't get back above the zero line despite higher highs here. So we still have divergence on the daily McClellan. We have divergence on the weekly McClellan. Current buckets sort of middle on the stocks above and below the Bollinger Band midline, yet you can see stocks are bunching up here below the midline. A surprise. We fired a Hindenburg omen on the Nasdaq. So the Hindenburg omen is this thing that Ian introduced many of us to well over a decade ago. And the Hindenburg omen is sort of the mathematical equation of when the big guys are dumping their stock on the little guys. You get a lot of new highs, a lot of new lows. It doesn't occur very often. Only 25% of them lead to major corrections. There's been no major corrections without a Hindenburg probably since World War II. And we fired a Hindenburg on the Nasdaq on Friday. That surprised me because the Nasdaq had a pretty good day. But I think it's got to do with the small stocks. It's got to do with the fact that as I showed you before, the S&P 1000 is underperforming the S&P 100. Now, also to be fair, the classic Hindenburg is calculated on the NYSE, and we have not enough new lows on the NYSE to be even close. Market tone, we look at the Woody indicator here on a suite of market ETFs, and green and yellow, so bullish mixed, but improved. Now, I'm a growth guy, so you see this every week. It's how I tell whether growth was winning. So the first thing we look at here is the ERG. ERG is a combination of EPS rank, relative strength rank, and group rank. You multiply 99 times 3, you get 297. So I guess the highest you could be is 297. What this gray bar here is the number of stocks at each ERG point. And you realize that, whoops, I'll get back here. That starting here and starting here, I really don't have enough stocks at the head and the tail to say much. But if I look at the center, you clearly got an uptrend. And if you look at the numbers here, you could see that you had greater returns the higher the ERG. You could see the more EPS rank, higher the return, the higher the relative strength, higher the return. So that is a growth win. Now in gold here, you have some of the Investors Business Daily indexes, IBD 50, Market Smith, Weekend Review, and you could see they really outperform 4.18 to 7.37. Wow. If you look at my portfolio, it was up 5.7. I picked some shorting candidates, but I also said I wasn't going to short. I was more interested in what signals they would give me, and they were up a lot, just telling me that things that got clobbered the prior week really rebounded. My buy watch was up 3.7, filter buys was up 1.76, and the S&P 500 was up 1.99. When I see my colors and IBD colors up here and the S&P down here, it just tells me growth was working. Notice how few groups had red. Awesome. Sector strength, again, more green than yellow, no red. So sector strength has improved. And again, this is the story of the market. If we look over the last month, let's look over here. This comes from the Sagar's Q Edge tool powered by Thomson Reuters data. 64% of the sectors over the last month are down. 62% of industry groups over the last month are down. 56% of stocks are down. This is a 50-50 market, and it's not that half the market's done really well and half the market's done really bad. It just seems to rotate around, whether it's big caps, little caps, whether it's value, whether it's growth. And so we've got this rolling rotations, and I think they've propped up the indexes because underneath, as I showed you last week, there are a lot of industry groups that got hammered. If we look at the performance Thursday and Friday, it's bad. 82% of the sectors down, 66 and 58 industry groups. and stocks down. But if we look just at Friday, it was such a strong day. You can see all the green, and 78% of the stocks were up. Notice what happened to my buckets. We now have nothing below, and we've got is that an 8% or so starting to go above, and we've increased from 33% above to 45% above the midline in one day. If we look at sectors, again, topsy-turvy. Over a month, 4 wins, 7 losers. Over one day, 7 and 4. Over 5 days, rather, 7 and 4. Over 10 days, 3 and 8. Very choppy market. Even the indexes look good or at new highs. Underneath is choppy. Now, if we looked at the end of the day and more evidence of choppy, what was really good, energy, came in last place over the last 2 months. Energy has weakened. Financials, extremely weak for months. Real estate, some weeks good, some weeks bad, was weak this week. Utilities, which were on the garbage heap, were now the top 2 on the last 2 days. Industrials have turned around. IT has been relatively strong, but it's had hiccups from time to time. But these are the rank on Friday of the industry groups. If you look at over the last week, discretionary and healthcare really moved up. Now, I always like to look at the top 2 or 3, and then what are the industry groups within them, and then rank them. And I'm going to just tell you about that trucking looks interesting. And you could see here how trucking has steadily improved as an industry group over the last month or two. I looked at everything above 140. I think I looked at the first 3, and I got a bunch of stocks that are listed here. These were some of the stocks that stood out as being good earnings per share growth and priced undervalued, which means not overpriced. I then ran it in the QVital tool that told me a little bit about the category. I ended up liking Werner. You can see big growth in revenue, big growth in earnings, not big growth in revenue, but good growth in earnings. And here was the stock chart reversing off of trendline support. Don't put this in here to confuse you. If you have Thomson Reuters, you got to get Q, because it allows you to do top-down real time, and then you plug it into your charting platform. If you don't have Thomson Reuters, pass, because it's another $1,000 a year if you want to get the real-time data. It's too bad. God, I would love to get this in Wealth Charts or some other free source of data. I've talked to Sager about this, and he's got me convinced that there's just data fields that are available in Thomson Reuters, or Refinitiv, I guess is the new name, and nowhere else. I drew this black line last week saying it'd be nice to see the canaries listed here, and yes, Priceline's booking, get above this line and break out. They had a great week. They got above the line, but the last couple of days they went sideways. We got earnings Lollapalooza this week, folks. So on the left is some of the big news that we're going to get, and I'm really drawing my eyes to this here at the press conference with Fed Chair Jerome Powell. He'll have things to talk about. He's going to have home sales, durable goods, Case-Shiller, consumer confidence. And as the week goes on, jobless claims, GDP first estimate, that should be interesting for Q2. It's a big number, isn't it? 8.5%. And then spending and others on Friday. So this is a major news week. I didn't say anything yet, but this is also historically one of the weakest weeks, I hate those two words together, in the calendar. And then, oh yeah, boy, do we have earnings galore this week. And I goofed here, it's Market Watch. I forgot to change that from Bloomberg, but I don't know who doesn't own some of these stocks. Do you own Tesla, AMD or Apple, Microsoft, Google, Visa, PayPal, Ford, Shopify? Oh my God. I don't know who slept worse last night, my dog or me, but I was more nervous than he was. And my dog doesn't sleep well. I'm so glad I didn't get put that stock or put that short. But these are some major stocks out here, and what I say here is something you should live with. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So we sold off Sunday night, Monday morning, reaching a level of short-term oversold that made the bounce predictable. The markets followed through with a broad-based rally. S&P 500, Dow, Nasdaq ended the week at record highs as investors embraced a buy-the-dip mindset and piled into the largest stocks in the market after a rough start to the week. You could see the year-to-dates. Multiple reasons led to the turnaround. The 50-day moving average was hit. I think it was a Coke, and then another Staples CEO said they don't see any issue with COVID in their earnings. Big tech, look at Snap, not big tech, but had good earnings, which really increased the thoughts about what's going to hit this week. FOMO. Now we got big tech, we got Fed meeting, we got COVID, Olympics, and mask mandates, and weak seasonality. So there is some risk. So I had a good week last year. Markets feel like they want to go higher. I had a good week last week. I had a great year last year. That said, if earnings disappoint, the Fed hints at tapering, or if COVID issues mount, we could see more risk off. So I know I just spent 45 minutes going over the markets, but hey guys, this is all about the market. You know what, let me just make a comment here. This is another one that's on my screen all day. Notice what happened here. This is the spider came down and tagged support. Forget the 50-day moving average. It did that too. It tagged support on Monday and then had a big move on Tuesday. The Qs tagged support, hard to see in here, on Monday. The diamond tagged support on Monday. And the Russell, as we know in here, had the sort of a spinning top, spinning bottom, had a reversal day on Monday with a reversal candle. Maybe it's not surprised they have the weakest pattern here, that they didn't come down and hit a trend line and bounce. So you didn't have to have wavy tonal pro to know that the market was turning around. Let's go back to TradeStation very quickly. Let's see how far we've come. Let's look at the E-minis. I look for 5 or 6 things: daily, weekly, monthly. Buy, buy, buy. So all time frames are to John Person buy. Green, green, and green. Green is an elder impulse indicator. It tells me it's okay to be long or hold. I should not be short. Third thing I look at, we're up at the top of the envelope. That's concerning but not worrisome. You can see it's run above the envelope before, and it can take a while to come down. I don't see any red dots, which is MACD divergences, which can run for a while, but the market's always come down. I come down here, I'm at 75% of the high jump. An extended market is when the high jump is at 100, there's 85, and we'll be at 100 right here. And when I see these numbers getting much above where 85 or 90, I know that a reversal is coming. We're not there, and notice the daily, the weekly, and the monthly bongo are green. I like this chart. Maybe it's getting extended. I think it looks great. The Dow, buy, 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 green, green, no dots within the envelope. Weekly bongo has not turned yet, so maybe we'll get that this week. That looks bullish, 55% on the high jump. The Russell, pulled back to the bottom and got a reversal. Now the issue will be whether it's a failed reversal that comes right back down. And keep in mind, this is a retracement in a weekly downtrend. And then the Nasdaq, which was the big gainer, up near the top, but it's not at the top of the band yet. Green, green, green with the arrows, and notice you have these red dots forming. If we don't start to see a positive histogram here, we'll get red dots up here as well. Here you're getting higher and higher highs, and you can't take out the MACD height of the prior high, which is a sign perhaps of reduced market participation or pressure, and hence the red dots. 83% on the high jump, so we're going to have to watch that this week. It doesn't hit the high jump often, but when it hits it gets up there, and it's up there now. I mean, it was 73. When it gets to 100, it's coming down almost guaranteed, although it could take a couple days for that to happen. So I look at the indexes, and they look pretty darn bullish to me. If I look at the dollar, I love to see this dollar down in the lower right quadrant, but it's sideways here. It's blue in buy signals. Weekly bond goes a buy. It's getting close on the high jump, and so maybe we'll see something happen up here. Maybe it's getting too extended short term. So I feel pretty good about the futures. Now let's go and look at HGSI. Oh, I forgot to bring that over. Okay. So bear with me a couple seconds while I resize it for the different resolution. My home computer has an 8K screen now, and I can't do a video on an 8K screen. I don't think anybody can because, well, maybe Camtasia will, but Snagit won't. Snagit limits me to 4K, and my screen's so big I could do 4Ks at the same time, but you won't be able to see anything. It'll be so small. So let's just do this, and let's open up Major Markets Plus. Rank it by top-down view. Look what's at the top ranked index. It's Nasdaq. When do you think growth stocks really work? Growth stocks work when at the top is the Nasdaq, and the Russell would help as well, but a lot of these growth stocks that I look at, that I use, are Nasdaq stocks. So I'm just opening up my indexes, my charts. And again, because of the way I've got this set up here, they're on another monitor. It's 4:23. I've got to be done probably by 4:45. So I've got maybe another 20 minutes of this, and I'll probably produce it when I get back from my dinner with Kathy and her husband. Oh, I miss our Sundays going to the club. All right, so we'll start here with the NASDAQ. First thing is I've ranked them here with the top-down view, so it brings the things that are have the best one-day and 5-day performance to the top. And if you're a growth stock, you got to be happy. NASDAQ, biotech, mid-cap, Dow, Innovator 50, Fidelity, Magellan. Come down the bottom, you've got gold, silver, volatility, gold, the dollar, bonds. Awesome. You want those things at the bottom if you are a growth stock investor. So let's take a look at what we got here. So the NASDAQ. If you've not been here before, you're going to be confused by names that I use. If you email me, I'll send you a video and a PDF of all my vocabulary. I'll show you what the signals mean. I'll show you the math. So you can make your own indicators if you want. But basically, as we saw before in the futures, steady up move. You can see this massive move off the March lows. On the weekly chart, all-time high set. Had a mobile breakout from the squeeze. Our weekly bond goes. My long-term trending indicator is positive. A lot of momentum indicators. This looks great. What can I say next? High jump here says 50%. I watch that as well if I'm looking at HGSI to make sure I'm not topping. That's the NASDAQ. Let's look at the S&P 500. Hard not to love that one either, is it? All-time high. Next. I'm not even going to say enough. I already said enough about these. Dow Jones Industrial Average. This one's different. It's sort of, here's that line it has to get above to set an all-time high. It's close. This is the cash, not the futures. It did set an all-time high, close. Mobile breakout from a squeeze. Sideways move, looks like it's breaking out. Hard for me to be bearish here. Look at the bottoming tail. Again, all it takes is news between now and 9:30 on Monday. And believe me, if I had put all of that Shopify, I was praying for a down open, but thank God that didn't happen. Dow Jones looks good. Go down here, look at the Russell 2000. It'll be the IWM. And you could see 210 is right about here, which is what it pulled down to when it reversed. Not nearly as bullish as the others. And if you've been here before, you know that I like to draw boxes. And unfortunately for the IWM, and for those that would be just trading the IWM, who I don't know anybody that would do that, is the IWM is living inside a big box. All right. IWM is living inside this. All right. Until the IWM breaks out, I don't plan on buying a lot of the IWM. Look where the bottom of the box is, right around 210. My boss is letting me know to hurry up and finish. Now, other really good things if you're a growth stock investor. Let's look at the 50. IBD breaking out, okay? Tell you something, well, I don't know if I can show it to you. This had the same signal the Russell did on Monday, reversal signal popped up on the Jody Samuels Wavy Tunnel Pro. Notice the weekly bond goes red, so it's still in a downtrend, as you could see here. I'd love to see that turn green. But if you do growth stocks, then that's got to be good for you. FANGs, I thought would have a good week, and FANGs have moved up nicely. Pull back. All right. Nicely for the FANGs. And what else can we look at? We can look at biotech. Biotech doing well, breaking out. And semiconductors. Now you see why I'm bullish. Semiconductors are sideways. Actually, as strong as they are, they too have been in a bit of a box. But they look, are they getting ready to break out? Intel wasn't that exciting. We got AMD this week. I bet they've got a better report. And then if I want to look at other things like the dollar, breaking out, but still way down in its long-term channel. If I want to look at gold, dollar strong, gold is going to be doing nothing below its moving averages. I wait for it to break above at least above the 200 and probably above the 50. Gold miners doing the same, trending down, and silver. I mean, why do I like HGSI? Look how easy it is to flip and how quick it is. All right, nothing. Now I want to look at the industry groups. Here's a real power HGSI. I've got 174 groups. Let's do it by 2-day force. I've got 60 to the upside. I've got 16, 15 to the downside. So decidedly bullish. Let's look at the upside ones. Now this was 90 the day before. That gives you an idea that we gave something up. In HGSI, right click, change to industry group. I got a list of stocks. Let me just tell you, this is one of these. Looks like a meme stock, and we're not going to even talk about it. I don't know what to do with it. So let's back up here. I don't want to look at that. Application software, Salesforce. I own the first couple. Salesforce.com. Is it ready to break out? It's closed its workaday acquisition. Now it's time to digest it. Mobile breakout from a squeeze right below the chandelier stop. A breakout above that, and I might add to my position. The craziest stock I own, because if you look at the fundamentals, is C. And I've owned this since it was $35 back here in 2020. And it's had just a major run with a bunch of heart attacks in here. Set an all-time high on Friday. I don't know how you can buy it here. I'm not even sure I can even hold it here, but I am. Twilio, especially look at the weekly breaking out. Support.com, inexpensive stock. I don't know much about it. Adobe. So here's the problem. These things are all, you want to buy them here. This is my buy signal. Pocket pivots, kahunas, John Person buy. You want to buy them off the 50. Even here would have been a nice buy. Way too extended. And that's sort of the challenge that I saw on my top-down review. Zendesk, I like this a lot. Big sideways move, breaking out here. Kahuna, weekly bongo still red. I don't love that. I have Hubs and I have Salesforce. So I don't know if I'm going to get a third in the same group. But workplace technology and support centers. Autodesk, basing here since January and broke out. Was this a surprise? No, it wasn't a surprise. At 1, 2, 3, three kahunas in a row and a John Person buy signal, a mobile breakout occurring 2 days before the stock breaks out. The stuff works. Here it is breaking out on the weekly. So a lot in application software looks good. Because of time, I'm going to go through a few. I mentioned home builders that I liked. I don't know anything about New Home. Had a major day here. I guess I could look at the news, but I'd rather buy DH Horton. Uptrend pullback, breaking out above the moving average of the chandelier. 3 kahunas in 4 days. A new John Person weekly, as well as daily, coming out of mobile breakup from a squeeze. I like DR, not DH Horton, DHI, but DR Horton. Lennar could say the exact same thing. I told you home builders are looking interesting. Internet-based services. Here's Shopify, and imagine you're holding a lot of 1650 calls short. You know, it closed here. It says at 1643.32, and it did not get put to me. But after hours, and it said in the money, and I was not happy. I learned the lesson. Unfortunately, it wasn't the hard way. Look at the breakout here, multiple kahunas. I got shaken out and I got right back in. Got shaken out here, got right back in. And like I said, I sold some calls on Monday way too early, then quickly bought another position. And I never sold the short calls because they were so far out of the money. Almost came back to hit me. Trade desk looks interesting. Breaking out off of support with a kahuna. Pinterest breaking out off of support with a pocket pivot, kahuna, and a John Person buy signal. I'm very simple how I do this. I look for the same pattern. Match.com has that pattern. So there's a lot of stocks that look good. Communication equipment. You know, Apple, wow. Apple all-time highs. Look at it right here. Have earnings this week. It's extended. I just raised up my strike prices. I rolled my calls up and out and sold some calls way out of the money against them, not naked, to pay for some of the premium. Cisco, hard for me to believe I was saying this, but Cisco looks like a buy. Mobile breakup from a squeeze on Thursday. Kahuna's and a person buy. That's my pattern. Uptrend, sideways, breakout. That's what I do all day long. And Clearfield, big breakout here as well. All right. I'm going to go forward, show you how I use HGSI. I'm just going to jump to my buy watch list because I'm looking at the clock and I got to go get ready to go out tonight. So let's pull up my buy watch list and see if there's anything I want to comment on it. Lots have extended the stocks. Now let me just tell you about my buy watch here. My buy watch is not go out and buy. My buy watch list are stocks that meet criteria that I like. Now, there may have been perfect stocks that I already own that didn't make it to this list. These may not be ready. They may have already gone and waiting for a pullback. But odds are this week I'm going to be buying off this list on Monday. Truckers looked really good. Look at JB Hunt. Upwards, it's a little messy, but it took out its 50. Look at the sideways move here and improving relative strength. Kahuna, person buy out of a squeeze. I like JB Hunt. And I also can tell you that all over the place I saw truckers. this week. Anything else that I want to point out that I really liked a lot? Well, many of these we've looked at. United Rentals, if we have a big infrastructure bill, this guy's going to run. Major uptrend, gone nowhere since the last 4 or 5 months. It's in a squeeze, broke above the 50, a couple kahunas, pocket pivots. This has got to be on your buy watch list. I'd wait for it to break out. You can see it at a new person buy on the weekly. Fulgent Genetics, a lot of people were talking about this one on Friday. This one had a big run up, as you could see here earlier, came back down, sitting right here at what should be good support. Probably not a lot of risk. Reminds me of Quidel, which we talked about the last 2 weeks. Stocks that will probably do better if COVID does worse. In fact, let me put Quidel up. Now, I'm in Quidel. We talked about it, I think, last week. Look at the weekly move it had. I sold calls against it at the 200, and I bought it off the 50. And that's quite a bit of dollars between them. That actually still looks pretty good. Chewy, my dog loves them. Pull back, moving up off of support, mobile breakup from a squeeze. That looked interesting as well. Again, the weekly, you can see a bullish engulfing pattern. So a lot of interesting looking stocks out here. Now you're thinking, how does somebody watch this many stocks? Nobody does. They let the system do it. So in TradeStation and Radar Screen, I will have the stocks that I'm interested in a screen. Now it's bunched up here because it's a lesser resolution. You'd be amazed we can get an 8K. And I'll be able to watch during the day looking for signals, reversals, breakouts, bounces, and so on and so forth. Somewhere over here are pullbacks. Go with flows, my secret weapon from Sagar. If you don't have this, you can think about Thinkorswim. And Thinkorswim, you got Market Watch, where you can have your indicators here as columns and have them fire. So I gave you some food for thought. I hope you learned from the beginning. Sometimes the market gives you a gift. I got one on Monday. I almost lost it. On Friday, I got a gift too. When I woke up and finally saw Thinkorswim did not put me the stock or put me in the short position. Have a great week. I'll post this probably late on Saturday. Do it again next week unless something changes. Take care, everybody. Trade safe. Goodbye.